It's your Mark Wahlberg of the Moving Averages, and I'm here with another video to help pour into your trading, your life, and your finances. My name is Jerremy Alexander Newsome, and this video, we're discussing how to determine are you buying a dip versus trying to catch a falling knife, and some strategies that you can use to implement in both scenarios. Step one, what is a falling knife? Well, number one, what you have to look at is how far has the trend already moved? Now, when we're talking about an overall movement, it doesn't have to be like from the beginning of time until now. It can be a pretty recent move, but let's take the example of Netflix in 2009. This was up 1,500%. So step one, is it up a gargantuan, ridiculous amount, and have people made money on it far too easily over the last, let's say 3 years? If the answer is yes, it's gonna have a pretty big pullback at some point. All right, your next step, is it below your main moving averages? What you'll see here on the screen, the blue line and the red line. The blue line represents the 100 simple moving average, the red line, the 200 simple moving average. Once we get below both of those moving averages, it is said to be in a downtrend. Once a stock is in a downtrend, ladies and gentlemen, you do not want to buy the stock aggressively, and you absolutely don't want to buy it with long-term call options, aka leaps. That can be a recipe for disaster, and you really want to time your strategies better once a stock gets below both of its long-term moving averages. Case in point, this is Netflix back in, like I said, 2011. So once Netflix hangs out here at the 200, you'll see a really gorgeous bullish candle here on August 9th, 2011. We're hanging out, and then bang. Not only does it break below, but it just absolutely crushes it. It does it with a gap on the 18th here. It opens below, everyone's trapped, everyone's losing money. Now, granted, you're only down at this particular point on Netflix, 32%. So you're like, okay, cool, this is a nice healthy correction. It can easily go higher. And while the answer is absolutely it can, what you'll notice is a bunch of bull volume right here. They got trapped, an open gap that was gapping down. There's a lot of signals that you need to look at your chart to determine if you are catching a falling knife. Now, if you are catching a falling knife, when should you do it? My answer would be when you really like the company, you know exactly what they do, and your position sizing and timing is correct. That is key. So let's go all the way back to 2011. And if you had bought Netflix at $29 a share, well, it's up in the last 10 years dramatically since then. However, you would have felt some serious pain as Netflix continued to just get absolutely smokehoused. Now, secondly, funny story, right here in this massive gap down in September, I actually bought options, and I was loading the boat on that bad boy because the trend was bearish and it just looked really weak. The funny thing is, I bought the wrong type of option. I bought calls instead of puts, woke up thinking I was an absolute god, just a trading hero, to only find out that I had bought a bunch of call options rather than puts. That was a $56,000 mistake that I'll never make again. So anyway, Netflix ended up trading down, ladies and gentlemen, a dramatic amount. This was 80, let's just call it 80% for easy numbers. So if you do like the company, you understand exactly how they make money, you use the product, you like the business model, buying shares is a fine way to approach it, but you just want to do it with very small size because stocks can go bankrupt. Generally, it's quite rare for massive megalithic companies that really add value to the world to just go to zero. However, it can happen, and it has happened before. But when you get really large sell-offs, especially after a humongous, just earth-shattering bullish run, this is scary, this is terrifying, it's fearful, but most specifically, if you are buying, you want to buy shares and you want to do it in small size. The way I accumulate is by generally buying about somewhere between 1 to 20 shares a week, depending on the company and the price of the stock. So let's bring us to a present day position, which is PayPal. Now, I am a shareholder of PayPal. I am in PayPal, and it does have some really intriguing reversal signals. Case in point, really nice gap down here. Although that gap did, for the most part, get filled back in September, it still is a really nice gap down and absolutely some people getting hosed. You can see it closed below the 200 right there. So at that point, it was said to be in a downtrend, and you would want to have started accumulating very cautiously, right? Being really trepidatious in your buying. Well, since then, I have been buying relatively about 5 to 10 shares a week, give or take. depending on how down the day is. So got 5, got 5, got 5, that's 15, got 5, and then boom, earnings was down huge. So on earnings, massive down day, bought 20, bought 20, bought 20. So I don't have a huge position in PayPal relatively. I mean, I guess, some people might think it's huge, but it's like 150 shares right now. And I'm going to continue doing that because I know exactly how PayPal makes money. I use PayPal all the time. I like their product. I get it. I check out with it frequently. They have great credit services. They help with the unbanked. They own Venmo. The list goes on. Plus, Black Friday and Christmas are right around the corner. So do I think PayPal is going to go bankrupt and going to go zero? I don't personally think that. Is it possible? Can it happen? Of course. So the amount of money that I'm investing into PayPal, I do know that it can go to zero, but I'm beginning to position in with accumulation. Now, that being said, I do think we're very, very close, and this video is going to get extremely close to the bottom of PayPal. I think the lowest it goes is probably 167 and some change max over the next few weeks, and then we'll slowly start to grind higher and eventually trade back up into 300. And it might take until January 2023, but I can certainly assure you that I'm not buying leaps right now on PayPal. I am buying shares. And there's many other stocks that fall into this category right now, Square being another one. Now, Square is below its 100 and 200 simple moving average on the daily chart. Therefore, it is said to be in a downtrend. Plus, you have lower highs all across the board, lower high, lower high, lower high. So when a stock is in an uptrend, when you have all these moving averages supporting its direction, you can then be more aggressive. You can then buy really big size. You can then buy leaps. You can start playing something more aggressive when you have moving averages in your favor, when you are buying the dip into a strong trend. However, once that trend is broken down, it begins to get a little fishy. So you might say, well, what about right here, Newsome? It did close below the 200, and I agree. I didn't buy tons on that day. In fact, my real life traders will tell you I actually shorted Square with some puts this day right here. At the close of May 19th, I got into some puts and then got stopped out on May 24th. We reclaimed the 200 days later, trapping this bear, this bear, this bear, and this bear with a strong bull candle. So I went long with a stop right here because now the risk reward is really nice. And that long paid out substantially. So anyway, we traded all the way back up to the highs, got into a collar, and then the rest is history. So long story, what we're looking at now on Square is a downtrending stock. I do have shares of Square. I am a shareholder of Square. Both of those are the exact same thing. I like this one. I know exactly how they make money. They are investing in cryptocurrencies. They own Cash App. There's a lot of great things that are going on with Square. I use them all the time in every small donut or cookie village that I go to here in Nashville, Tennessee. I'm not getting rid of my Square shares. However, I can always hedge with options. I can always buy puts. I can always protect myself. And I can also buy, this one's a little bit more pricey per share than PayPal. So I might buy 1 to 5 shares every week and just slowly build into my position. So you'll see my bullish limit buys around 195. I will buy, and I'll be a little bit more aggressive down here at the 100 simple on the weekly chart, right? The fear that's happening right now on Square is, it's definitely palpable for sure. And this is a really, really strong gap down today. So yes, Square will be going a little bit lower. So I know that I will be protecting myself. I'll day trade, I'll hedge, I'll play puts, I'll short it a little bit, make some money on the downside, and I'll use that money that I make from the downside from buying puts and day trading bearish to buy those shares and accumulate those shares over time. And we get down to 180, 160 and some change. I'll probably end up having 400 or 500 shares, ride up hopefully to 260 and start getting into some collars and then rinse and repeat. Will that require patience? Will that require time? Will that require waiting and not stressing out and trying to do abundance, doing all my abundance exercises and gratitude journals and trying to create cash flow from other things? Yes, but again, this position is in my longer term account, right? This isn't an IRA, longer term position on Square. I'm not really stressing out about it because it's obviously in a downtrend. It broke below the 200 simple, we closed below it. So why would I position into a swing trade account, or I don't ever get into a position trade in a day trading account, but if I'm swing trading or day trading, I'm bearish. Long term, I know the company, I like the company, I'm tiptoeing in small size with an accumulation strategy, which is this. Now, there's a lot of individuals who will say, what's the difference between an accumulation strategy and a pyramid strategy? And really the answer is not much. The accumulation strategy for me is just dependent on how much cash I have available. If I have a lot of cash and a lot of stocks and some really things are looking nice, I will absolutely use the accumulation strategy, especially if I'm bored and have a lot of time on my hands. The pyramid strategy, I generally do like to use when a stock is uptrending, but I likely expect to pull it into some moving averages at some point in time. So I'll use the pyramid rather than the accumulation style strategy. Accumulation for me, again, is usually when it's below the long-term moving averages. Pyramiding is oftentimes when it's going to pull into the moving averages, like so, case in point right here. Very, very extended, hasn't hit the long terms in like a year and some change. I'm going to be start using a pyramid rather than an accumulation strategy because it's still above all the long-term moving averages, right? If I go all the way back here, boom, I'm a pyramid into this example because you got the long terms, we haven't hit them. That's going to be the pyramid strategy where I will set up in advance, something that looks like this: 20 shares, 30 shares, 90 shares, 120 shares. That will be a pyramid because it's still in an uptrend, but I know it's going to pull back. Let's go to Crowdstrike. Crowdstrike would be a perfect example of that. It was. So anyway, this is the first time we're hitting the 200 simple on Crowdstrike. So for me, if I'm looking at this on the weekly chart, again, what I just mentioned earlier, this thing has had an absolute legendary run up, 700% in the last year and a half. So yeah, I expect this one to probably pull back a little bit more. You had equal highs up here at 297. We never got to the 300 mark. I think it's going to pull back. This weekly chart looks a little weakly. Plus you have a bear gap and go on a weekly chart. So, that's a really, really interesting signal. So use some technical analysis, use your gaps, use your volume, use your candles to help you determine, is this going to be something that you want to get into? But since we're above the 100 on the weekly, and we did just come into the 200 on the daily, and this is where it's at now, I could use this as a pyramid. It would just look something like this, right? That would be my pyramid, the top of my pyramid. So 20 shares, again, 30 shares, 40 shares, and 50 shares. That would be like that on Crowdstrike. Now, could I pyramid and accumulate? Sure. Could I accumulate rather than pyramid? Absolutely. Do I know what Crowdstrike does? Not really. Do I use their services? Not really. Do I spend money doing their products? Not really. So I'm not going to do anything specific with this one. I'll just trade it directionally up or down. I'm not going to accumulate or pyramid into this one because, granted, I don't interact with their products every day, and that's just one of the rules of investments that I have. And honestly, this looks like a really, really dirty double top. So if this thing rests for 3 or 4 days and goes lower, oh my gosh, short the pants off this thing. Now, what about buying the dip? Well, let's go to Roblox. And I'll either be an idiot or a genius when this video comes out. However, I personally feel like this is a really nice dip buying opportunity. Why? Literally everything is bullish. All the moving averages on the daily, the weekly, the monthly, the gap, the volume, the direction, the trend, the earnings, everything is bullish on this one. Could I be wrong? Absolutely. However, when I get a huge sell-off in a really, really nice uptrending stock, and this is the very, very first selling candle that we got, I tend to buy call options on those days. So I did get into some January $80 2023 call options. I bought nice and far in the money because they're really not that expensive. So I bought them for around $50 per contract or $5,000 a contract. So getting into some Roblox here, buying some leaps, I feel like, and we'll again come to find out later if it's a good idea or not, but it seems like a good idea to me, mostly because this isn't in a bullish uptrend on every single time frame. When will I know I'm right or wrong? I'm gonna have to wait 2 or 3 months. But I can tell you this, if this stock is in an uptrend on all time frames, you got 9 or 10 factors that say, yes, this looks good, support, resistance, moving averages, gaps, volume, trend, earnings, everything like that. Those are said to be bullish. Those are said to be in favor. Those are the ones you buy some dips on, AKA back on November 10th and potentially maybe right here. So do I expect this tomorrow? No, but I do expect maybe something like that, a chop around, and then eventually a grind higher. And when we grind higher, once the base is formed, if it forms, once I get some more information, some more intel, and some more data, and some more pressure starts to really push up into these moving averages, then I can take a stop loss, increase my stop loss, and then add much more size into this trade, like let's say getting in there in January perhaps. Once we consolidate it for a month and let a lot of pressure build and then we pop explode and I really hammer it hard, yes, that I can do for sure, because there's a massive difference in my opinion between buying the dip and catching a falling knife. I hope this video explained it adequately. If you have any questions, throw them in the comment section below. What stocks do you think are in a downtrend right now? Which ones are you buying and why? I'd love to see your comments. You rock. Thank you. Goodbye.